Audio morning brief for the U.S. stock market, 7:59 a.m. Eastern Time, February 26. I'm Rich Paz for Critical Point. Okay, let's go right to some prices. And what we have for the NASDAQ 100 cash is there is downside potential to 17,800 to 17,469. There is upside potential to 18,163 or thereabouts. Now, things to watch on the downside are also, say, 20-day and 50-day moving averages. And then the Dow Jones Industrial Cash Index, downside potential 238,826 to 37,941. Upside potential 39,619 to 39,405. And then what we have is the watch the 50-day and 20-day averages there in terms of the downside. Now for the S&P 500 cash, there's downside potential to 50.27 to 49.92, and it may not fill the huge gap created last week. It may fill some of it and then just rally for the rest of the year, and consider that for the other two indexes, and then also consider 20 to 50-day moving averages for potential downside. Now the S&P 500 has upside potential to the 5130s. That would complete one range of upside target that's already been met, some of it, but there's also 5140s to 5200s. So really the door's open all the way to 5200, which is one of our major upside targets calculated quite some time ago, and some Wall Street firms are on board with that. They're thinking, yes, we're going to go there. Now, those targets are really met for now all the way to the end of the March for the larger downtrend that I'll talk about in a moment. But first, let's focus on the near-term, very short-term stuff. The market, if it trades for the cash S&P 500 below 5081.46, I think it is, it might be 40. Really one of the lows on Friday. If it trades below that, we need to consider level 4 top and bottom, but the bottom is violated and the market is extending lower into tomorrow. If it late today, like the latter half of this session, if it's trending lower, there's a chance it may trend lower into tomorrow. And then we get a lower close today, I think probability will be a little on the high side towards some more decline tomorrow, and that can even extend into Wednesday. So that's the level 4 swings, and that's a strange pattern to see a top bottom and then say, but it's going to keep going lower anyways. That bottom's not going to work. So we have to be cautious here. It might be bottoming and going to rally higher early this week for the next level 4 instead of dropping and then rallying, but to a lower price high on a daily. So the reason for this debate of how these level 4s are going to roll this week is that when we zoom out from those inter-week to intraday level 4s, we have the level 3 that's the largest, longest trend up and down during a month, a monthly kind of buy-sell signal, monthly supply demand, that kind of thing. And the level 3 trend could have topped last Friday with a level 4 top. By the way, another way of looking at this, if late today the market has traded above Friday's high, I think you better assume we've had the normal pattern of top, bottom for level 4, and instead of being down tomorrow, it's going to be up tomorrow, okay? So just watch Friday's high as a clue. It's probably going to stay up a bit longer. But for this level 3, if it topped Friday, it ought to work lower for at least a little while this week for a bottom, could, in theory, extend into early next week, stay down that long. This could be a down week. Now, that level 3 down would also be the first leg lower, I believe, of the larger level 2, level 1 trends that I'll talk about in a moment. The problem with assuming the level 3, let's put it this way. Let's assume we got a level 3 top Friday, that NVIDIA run-up is over, and even larger trends are over and done with, and we can pull this back in March. But if this week it pops above Friday's high, we're just going to throw additional darts. We need to look for that level 3 top all of this week I'm hopeful it tops out no later than Wednesday if it did not top out on Friday. Now, this level 3 top should coincide with level 2, level 1 tops, the second and first most important trends during a year. The up move from January to now will be over. The up move from October of last year to now is over. Now, those trends fit inside of long-term trends that are still up for all of this year. This is just a fluctuation that's coming. So what I think is we're going to see a zigzag kind of movement throughout this month. I think there ought to be a down move, an up move, and a down move, basically, but it could be far more complicated, jagged, choppy, sloppy than that. It could be just flat out down and into March 20th for some reason. I doubt it, and March 20th is the Federal Reserve meeting. By the way, other news we need to watch for this week, there are data and reports coming out every day this week. There's earnings still coming out. We have the GDP report, I believe, on Wednesday. That could be fairly important. There's also, I think, some sentiment stuff. There's construction spending or other housing stuff that could be fairly important. But I think it's really, and then on Friday, we're going to get the PMI manufacturing. That may or may not be important. But I think Thursday sticks out as the most important day to watch. That's the PCE inflation report. And over the weekend, I heard from others in Wall Street are forecasting a pretty good drop in PCE, and some of them are thinking that report day on Thursday might turn bullish. The stock market might be up quite a bit. We're going to have another leg higher. And I think even Ed Yardeni was on CNBC, and or was at least quoted by someone at CNBC, that there's that possibility that we're going to get a good PCE inflation report, and they're going to buy. Okay, so we got to watch out that for Thursday. It may mean this level 3 bottom is going to occur before Thursday, before 8:30 a.m. Eastern time. Okay, and is going to really only give us a couple of days here to pull this market down. The way I look at it, it is time to pull this market down and fill some of that large, huge gap, okay, created off this NVIDIA. It is time for people to calm down a bit and say, hey, we're only looking at a handful of stocks that did support several handful of stocks, but didn't really support the entire stock market, okay? And that nothing has changed that fast and that bullish. So I think even the long-term aggressive bulls, even if they bought last week off of NVIDIA, they may be willing to sell a little and see if they can buy it cheaper, or they may just say they're going to keep what they bought, but they want to buy more, but they'd still like to buy a pullback. And that's the problem with this decline due in March. I don't think it's going to pull back the way we once said. I said maybe down to about 4,800 was the lowest I see. It's probably going to be 4,900s. I think probably they're going to pull it back to near 5,000, and that may be all we get. And it may be that this week, I wish they'd knock this down 50 or 80 points on the S&P 500 before Thursday, because I'd probably close my eyes and buy some. Even if it's going down quite a bit later in March, I'd probably do it anyways, because I'm concerned that this level 1, even though it's the most important kind of pattern during a year and during a long-term bull market, and it could be down viciously, okay? It just looks like there's really nothing to it. Nobody really wants to sell this hard. Somebody last week said of the bears in Wall Street, they don't dare sell anything and may not sell anything for quite some time, okay? This NVIDIA thing really, people were already leaning towards an AI boom and something like the 1990s, but it's really sunk into them this time that, boy, this really can work. We might be on a non-stop bull market for quite some time, all right? So I'm thinking limited downside. I'm thinking this level 1 isn't going to work as well as the majority of the patterns. It might be difficult to keep up with. And I think what this market really wants to do is move higher into June, July. And a phase of that will be higher in April, May, but probably around May to June, we'll see a setback for level 2, another run up sometime June, July, okay, maybe even in August, and then that'll complete another level 1. And then maybe we'll get some more serious downside just because people are going to look at this saying, we kept this market up for 6, 7, 8 months, and look how much it's rallied and compare that to past years, maybe the August to October bearishness or messiness we see seasonally most years, maybe that's going to work, and that may calm them down. But in the meantime, though, we just have to consider we're probably going to continue to get good information on the strong economy. And I think the stock market is waking up to the fact it shouldn't worry over interest rates, because there's really no reason to lower interest rates. The economy is already doing well enough. We don't have to help out the economy by lowering interest rates. And you can see there's long-term reasons where the Federal Reserve might not want to do it, okay? And they might be thinking they got lucky that they were forced to fight inflation and raise interest rates, but the point is, during a good economy, they're supposed to raise them anyways, so there's a safety net for the next downturn, the next recession. Well, now they got their safety net built in, okay? Plus, look at all the people complaining for so many years of not getting a good interest rate in their savings account. They got it. So we may have changed some things permanently, that we're not going back to 0 to 1%, 2% rates, okay? So the trade has dialed all this in, and I think this can keep them bullish. So I'll finish now with welcome to 1925, maybe 1924, 25 is some kind of combination or something. Welcome to 1995. All right, I think we really have those chance for the roaring 20s again and things like this. Not exactly like it. You're not going to see people behave and dress up and all that stuff. But at least for the stock market, it can be that bullish. And for the rest of this decade, it can be that bullish for this year. So we'll discuss more on that. I'm probably even going to start playing a little 1920s music for some of my updates, like the weekly update. I'm that excited about this. Did some more analysis over the weekend, and really I like seeing what's going on. And I'll explain how the economics are different when we don't have to worry about crashing moments like we saw in the 20s and the 90s after that bull market. And not only that, we should focus on the bull market and not hold ourselves back here just because someday, yes, there will be a major setback coming. And that someday is probably the end of this decade, if I'm correct. All right, so today's going to be an interesting day. Late today, it's going higher. It's probably going higher some more of this week. But it is due to setback, and it's probably going to be difficult and complicated here to figure out how this is going to work during the month of March, because we might get the largest pullback by early March and then bounce it some, maybe pull it back for the Federal Reserve, but not to a new low for the month, and then it's just higher in April, May. The other scenario is we might be down early March, up, and then we might even be lower still for the Federal Reserve. And it's all coming up with equal probability. I'm kind of feeling like if I can buy any kind of a little bit of a pullback, I'm going to tell myself, don't worry about the additional downside. Just get in. Just try to get some kind of a setback here. I'm that more confident of April on into June, July as bullish for the U.S. stock market. Now, I don't think the interest rates are going to do much of anything here. They're not helping me, and I'm having a difficult timing them. I do think interest rates will be lower in April, May, but I still believe they ought to be higher in March and might be one of the drivers to help knock the stock market down. But they're acting kind of weird right now, as if they're unsure what they're going to do. And they may trade both sides here, but not really accomplish a whole lot for a while until we get that Federal Reserve meeting March 20th. So again, for this week, keep an eye on Thursday, PCE inflation report. Probably the most important event, but there's data, news, and reports coming out every day of this week, and there are earnings. Watch those price levels I give you a clue how this is going to unfold. And but basically, I still believe we ought to have a little bit of respect to this level 1 pattern. There ought to be some kind of setback going into March, and then more upside April, May. Past results and non-necessary indicative future results. Have a great day. Thank you.